Hello and welcome to my next War and Markets review. Well, today was a continuation of what happened on Friday in terms of a very green market. The geopolitical news that came on Friday got strengthened, and Mr. Trump further tweeted that I think on the 19th, this Friday, there will be a signing of the deal for a 60-day ceasefire. And from what I hear now, Mr. Trump is personally going to be electronically signing the deal and may even arrive at Geneva to do the needful. So it looks like they're very serious about the whole exercise now. The markets reflected that in somewhat of a way. Why? First of all, while it was a green market and the advanced decline ratio was also 3:1, and the broader markets outperforming the larger caps, just like on Friday, the actual growth in the markets were not as good as on Friday. So, as they say, buy on the rumors, sell on the news. So, I think today I saw that the Nifty, after crossing 24,000, gave up some of the gains, and most of these sectors, all of them almost did well, gave up the gains to the later of the day. So, there was some element of profit booking which came in. The second aspect is, of course, is that Nifty itself was up about just about flat 1%, around 1%. Mid caps and small caps were also 1.3 and 1.1. Micro caps did the best with about 1.7, 1.8% of uptick. The only sector on the negative today was the pharma sector, and part of the reason is that the continued strengthening of the rupee. Now, the last 2 days, the rupee has strengthened almost 1 rupee. It ended at 94.71 today. So IT also saw some selling, but some value buying also stepped in, and I think IT ended up the same as the Nifty at around 0.98%. So clearly, these two sectors were affected by a strengthening rupee. I believe that the RBI's decision to allow FIIs into a broader range of GSECs and all of that, I think we've seen about 15,000 crores, I read somewhere, that they have brought in into the GSECs. So clearly, the measure is working. We'll soon see the rupee also get the benefit of the FCNR flows. I believe almost like 6% interest is being promised by the Indian banks there. And from an NRI's perspective, when the US 10-year is at about 4.5%, right, roughly, for him to get 6% from India, which he doesn't see as a risk, is a very good return. And some of the banks are offering leverage also, in sense that against their existing FDs, they can take a loan, borrow it, and still make a net difference. So I think that a good amount of money should flow in. So the spot rupee should see a reasonable amount of strengthening, which is good for the economy and should be good for the FII flows. But that's the one thing which is a bit puzzling today, is that the FII flows turned positive, which is great news, but only about 200 crores. So it is at the margin. And I saw the gross numbers. They bought and sold about 15,000 crores today. So the fact is that if you look at also the action on the F&O front, it's a classic defensive posture where they are net short on the index futures. They have written a lot of puts and they are again short on the calls. So it's a classic defensive. It's not a directional move. It's a very classic defensive move. So what is the reason for that? Well, you could attribute to the fact that our FI is still unsure that the deal was going to sign during the day. Like I said, just now got news that Mr. Trump is going to electronically sign it. Whether that is the case, or the fact that for them, from an India perspective, they still see even the oil, which improved 4% today to 83. And mind you, just 1 week ago, it was at 93. So you have a $10 drop in the price of oil, which is substantial. But I think FIs probably feel that even at 83, there is still a little bit of fiscal concern which can just get resolved. But hopefully it should improve. But the other way to look at this 200 crore positive is that just last Monday, they sold 8,000 crores negative. So you can, one way to look at it is, oh, from 8,000 crores negative, they're 200 crores positive. There's a positive way of looking at it. The second is, with such good news on 2 consecutive days, they sold 1,000 crores on Friday and they bought only 200 crores. So the answer lies somewhere in between. Let's track that. So one of the things, of course, to watch out for from a tomorrow's market perspective, or even maybe day after, is the Fed. Right now, the Fed policy is indicating a clear hold, but the language of the new Fed governor in terms of the whole inflation, how much credence is he giving to the deal, and saying, then thinking of the inflation as transitory, we'll all get to know, and that should affect it. So net today with a strengthening rupee, right, and with the fact that the oil price has come down by $10, means that market is feeling that any chance of an RBI rate hike is now dimmed considerably. In fact, a mid-policy rate hike was also thought of by some participants. Clearly, that's off the table. So today's best performing sectors were the rate sensitives, right? Your real estate, auto, consumer durables. These are the ones which benefited from a relief that RBI will no longer be under severe pressure to hike the rates. Of course, in the coming weeks, we do need to track the monsoon and the El Nino effect, which will also have an impact on food inflation. That's for another day as the days come by. So overall, a good day for the market. Not as great as Friday, but still good day. And retail participation very strong. FIs turned marginally positive. So I think a lot of positives to take away, but the market is really going to shoot up only when we see a decisive turn from the FIIs in terms of participating in a more positive way in the news that has happened. So let's keep hoping that the deal actually comes through on Friday and the Fed also doesn't adopt too hawkish a posture in their notes, which will all continue to be positive for both emerging markets as well as for India. Look forward to my update tomorrow.